Hey traders, what's going on? Jamie Saettele here. It is September 13th, 2017, SB Trade Desk Midweek Strategy Webinar. Back to doing it on Wednesdays here. Did the last, I think, 2 or 3 on Thursdays. Anyway, let me know that you can hear me and that you can see the screen, and then we'll get started. We'll look at the dollar stuff first. A couple of dollar indices. You're looking at on the screen right here is the US dollar. Actually, I want to look at DXY first. Thomas says AV okay. All right, good. Okay, so we'll go back to, actually can't see it on this chart because they don't show the gap. So I will bring this on over. All right. DXY. So DXY tweeted this out right when it happened last week, right here, right? The 2015 opening gap. And we filled it. We filled that gap right on it. Like, it dropped 7 ticks below it and has rebounded. So, you know, that in itself pretty big. And of course, the sentiment getting a little overheated, right? We looked at on Monday or Sunday's post, talked about the extreme sentiment, you know, that was pervasive here, and it was going on with, you know, the George Washington picture, the tears, you know, basically you could say it's kind of the exact opposite as far as what was on the Economist cover back in December. And, you know, again, on that note, you did have a cover, right, that was presented, the Economist, which is much more important than simply an article somewhere in Barron's. It wasn't even the Barron's, you know, cover, right? So the Economist cover more important, and obviously that dollar high is obviously very important, right? Dollar's been tanking since then. But this is still important. So, you know, it probably means that you have a bottom in the dollar for at least, you know, I'd say at least, you know, something like 3 to 4, you know, weeks, something like that. Maybe not months, which would be the case if you had, you know, more of had a cover going on. But on the, you know, price levels here, if we're looking at DXY, where can we kind of think that we're going, or, you know, assume that we're going? Well, so we are toying on this, you know, median line, and we're bouncing off of it. The gap mentioned as well. I think you head back towards 94, at least, right? That would be the former lower parallel, right? And this is the exact same setup or analysis that we are looking at on the British pound, but on a short-term basis. Okay, and remember that's just you take your channel. This is a weekly chart, but it's the same idea. You're taking your channel and you're looking for the top. So this upper line here, right? That's where you're looking for support now, which would essentially be down here anyway. So it's the same idea. It's the same setup. It's just a much bigger chart. So I do think we head back to this region, you know, 94 region, which would put you, you know, euro again, probably back at least near 117, if not closer to 116. You know, that 13-week average is something that we're going to want to watch. So again, you can get the, you know, questions in if you want. I'm just going to do my routine here and go through the majors, and then we'll talk about the crosses and maybe other markets that you guys are interested in. So that's what we're looking at with the dollar. That's kind of my general thesis, theme, what have you, moving through probably the rest of this month would be my best guess here. All right, so US dollar, the FXCM one. And again, this is the one with Aussie. You should all be familiar with this by now. But this one channels actually better in the sense that the lower channel line was the low here on 9/8. So that would have been last Thursday, I believe. And it was last Thursday. It was in the evening. You know, you made that big drop during Asia, and then the European low in the dollar, and since then it's been up. And then this is just this morning, right? And we've started the second leg up, it looks like, in the dollar. You know, levels here, pretty simple. Just pay attention to the structure, the median line, right? You can see that the median line could be some sort of resistance. But on this one, the upper channel towards, you know, kind of towards the end of the month, is going to be up near 12,011, which happens to also be the U.S. election low. So again, that would probably be where would, you know, the ultimate time, if this were to play out, where you'd want to turn into maybe a dollar bear again. That's what I'll be looking at as far as the dollar is concerned on this index, right? Now, when we look at the drop here, right, Elliott wave is never it's never as simple as you know, the textbook makes it, right? If you look at this, you know, how would you count the drop from here, right? Is this a 3 down, up, and an impulse? You know, you could count it a number of ways, really. You could count this as a 1, 2, 3, 4, 5. It could be a diagonal. It could be a, you know, that's probably how I would look at it. It's not, again, it's not textbook, but real life, you know, isn't. So in that sense, you'd actually expect a full retracement. You'd expect to go back here anyway. And again, that would be the 12,011 area, which is the U.S. election low. So it puts us, I think, on a dollar bull path for the remainder of this month would be my best guess scenario here. Although, again, that's not, you know, don't make that assumption, I would say, across the board. You know, the British pound, for example, I think I mentioned this in one of the notes recently, but, you know, August was not a great month for the US dollar, right? Well, the British pound fell for most of August as well. And so did the New Zealand dollar, for that matter. So it's not so cut and dry, right? Remember, DXY is going to be more euro anyway. So when I am looking at DXY, I'm looking at euro, I'm looking for things that might match up there. You know, my main focus is going to be really on euro with that, you know, from that respect. So keep that in mind as we go through these other currencies like the pound. All right, let's go into the. Actually, before we do that, let's take a look real quick at some of the averages in DXY, right? So DXY here. Okay. So remember, DXY, what did we say? The 94 region, right? You have the 13-week average up there as well in green. And I've found through the years that when you're in a really strong trend, and I would call this decline in dollar a very, you know, strong downtrend, that 13-week average is one that if you're going to continue strongly in the direction that you're going, you tend to get that first test there, right? 13 weeks, it's just a quarter, rolling quarter. It's quite similar to say the 55-day average, right? Roughly 3 months. So pay attention to that area, but I do think that's going to be a big spot for the dollar here. Same can be said, of course, for euro, which we are going to start looking at right now. Okay, so euro. Here's that 13-week average. Okay, it's currently 1689, and obviously it's going to increase each day, so it'll be closer to 117 over the next few weeks. 117 is also the 2015 high, 117.12, if you want to get real specific on it, and I think that's where we're going. Trade-wise, with euro. This was the chart this morning, looking at the chart, hoping for a pop into the median line just above 120 to issue a short position. That did not happen. Obviously, the high was 1994, and at this point, I'd be comfortable probably just putting short orders in at, say, 1940, right? 1945 was support early in the week. That was, I think it was excuse me, I think it was Monday's low, actually. So 1945, an area to short, stops just over the high from this morning. Okay, so at that point, you're looking at, say, 50 pips of risk, and your first target on this, 2 legs down from the high, is going to put you at 1830, which is awfully close to the 831 low at 1823. Right, pretty good horizontal level there. You can see that various, various resistance levels or points at which that was resistance going back to 8, right, August 8th, and then on August 21st. Okay, and then of course that was the low on 831. So essentially looking to short 1940s, take it down to 1820s. Okay, 50 pip stop, and then eventually let it ride for, low 117s. And remember that 117s is the big old median line down there too, right? The blue one. So eventually, thinking is that we probably actually break this structure, this trend line. That's my thought. I don't know if that's going to happen, but that's my thought, because I think you'll probably get down to that 117. That's the bigger, more important area to look at, based on the 13-week average, based on the median line. Those are the two primary concerns from my technical standpoint or view or what have you. So, excuse me. So that's where I'm looking at with euro. So bearish euro, and then when I go to look at the British pound, I'm like, what's going on with the British pound? Because it's obviously traded in an extreme bullish manner. As you can see, British pound is not one that you want to chase too often, or ever for that matter, because it does stuff like this, right? So we broke out to the highest level we had been at since last night. We were at the highest level since 9/13/2016, exactly a year ago, right? Right over here. So in essence, the British pound went unchanged on the year. Pretty wild, right? On a rolling year. After all that, after the Brexit, after the October 2016 flash crash, which was the low, although I consider probably the January 16th date really to be more of the low to work on from a trend line standpoint. So, coming off, and again, 240-minute chart, right? Level that I think we are going to find support at, or where we should find support at, tomorrow with BOE, if this is a bull, is going to be on this blue line, right? The channel line that we showed early in the webinar. So that is going to be, and obviously allowing for spikes. It's essentially down near the low from Monday, or sorry, not Monday. It would be Tuesday, because it would be Monday evening. So technically be Tuesday's trading day, and that's 130, 157. So you might be going for a round trip here, but then I'd be looking for another move higher in cable. Again, pretty clean on the wave count, right? 1, 2, Got a big third wave higher. Extreme momentum, fits all the things you'd be looking for in a third wave. And then taking it up to this upper parallel, right? So on that, let's kind of go over just the clean cable levels here. So there's always going to be multiple, slopes, angles that you can draw, right? This is one that we had a while ago, and this is, I'm looking at log scale here. There we go. We want to look at log scale. This is one that we had earlier in the year, and we were actually looking at this in early August. So I thought we could get your move higher in your median line break. Didn't happen. Got the failure. Came off again throughout most of August. August 23rd was the low. Remember the headline about British pound about to feel more pain. Blah 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 blah. So there's this one. However, you just take a moment to look at a chart, say with nothing on it, right? No indicators or anything. And that looks pretty clean, no? So for the time being, my concern from a slope perspective is really on this one. If we draw that in, you can see it's pretty clean, right? Median line here, and that's going to put you down pretty close, really, to where that blue line comes in that we just drew on the other chart. So, it's between here and basically this center line. The center line, probably the one that I actually pay more attention to, because look at the clean, reactions, etc. around it, right? Especially recently, especially back here, about a month ago. This was August 11th. And even stuff like this, when we traded up to it here last week and pulled off, and then we got through it, you're looking at this as really your main, to me, it's your main pivot in cable. So the levels that I will want to trade tomorrow is essentially this line, which, is not far from some good highs here. You got this high at 31.25 and this high at 31.58. So you get yourself a nice zone to work with there in the British pound. And then, of course, the September 2016 high is at 34.44. And guess what else is up there too? That would be where your upper parallel comes in. So, here and here. That is my trading plan for BOE. Okay. Roughly a 300 pip range, which, is certainly doable on BOE. So I, keep that chart. Now we do have a reversal here today. And again, I think you can carry down into the 130, 140s and then get the bounce and maybe take this back up into 34, 44. And then you might actually have another pullback because, again, we're talking about an impulse. 1, 2, 3, 4, 5. And I want to see where the fib would be for this third wave. Where's the 38.2 on this? Because if it's in this zone, it's even better. And it is. 31.46. Look at that. Okay. So you've got really something special to work with, I think, here, technically heading into tomorrow's BOE, right? And look, not a fundamental guy as far as you know the BOE and analyzing central banks and this and that, but when you have a setup this clean, you know, you don't really need to be, right? You don't need to try to predict the future. Just, you know, trade around the levels. And again, at the end of the day, you'll be fine. At the end of the year, you'll be fine, I should say. All right. So let's go to dollar yen, and then we'll go to pound yen, because obviously pound dollar and pound and dollar yen is going to make you, if they made babies, they'd have pound yen. And talked about the FOMO trade, right, last night. That's what dollar yen is. Not necessarily when it goes down, but when it goes up. And that's from an institutional basis. Institutional traders love buying dollar yen. They just love it. Okay? They're trying to buy it all the time. And that's why you get the bottoms that you get in dollar yen, right? I mean, let's just look at just this year, the important lows that we've had in dollar yen. I mean, the one back in April, right? This was the first round of the French elections. I mean, kind of straight up, right? You did have some consolidation, right? But few and far between. I mean, really, after the big ramp higher following the day after the gap, you know, this kind of would have been your pullback. And it looked like a bearish daily bar anyway. And then we have, you know, the biggest pullback we've had so far this week is the one from last night. And that's why I talked about the FOMO stuff, right? That's why I talked about, you know, 109.84, so maybe 109.67 because that's a square root level down here, right? But the month open at 109.95. That was it. Okay, we're in there this morning, and right when U.S. markets open, you know, when U.S. traders go online, institutional traders, they are worried about missing out on dollar yen upside. You know, I've seen it so many times. So, you know, if you were, you know, got in at 109.95 or something, which was the month open, then congratulations, and you know, you probably have some resistance to deal with up here. This is the August high right here at 111.05. You know, I know you could look at the short-term chart, and it looks awfully extended, but this is actually where the alerts come into play, right? So you can see here. Actually, let's go to the system page. Okay, system page. You can see here we haven't had. I'll be turning this on, but we haven't had an alert yet. Let me clear this up so you can see it better. Okay. So, you know, after say the big V bottom that you got after the election, right? Your first entry came. You would have said buying this dip probably would have felt really stupid and frightening, but that's why it's a system, right? and that, you know, you're supposed to just kind of follow it. But you know, you get chopped up. But if I do think we can be going into a really strong move. So, you know, the last couple moves higher. Let's go back to the April one, right? This would have been your signal here. After this, if you're looking at this on say a classic Elliott basis or something, then you're like, no freaking way. You know, this is a, you know, 1, 2, 3, 4, 5 up. We're going to get a bigger drop. No, it just keeps going. Same thing here. This one probably would have been a little easier to take, right? Back in June, but you get the rip higher. You start to get the blue dots. That's, you know, your signal. Okay, so obviously so far we haven't seen anything like that. We haven't had a buy signal yet. All right. So we'll see. You know, have this turned on, but Maybe you get lucky. Maybe we do get back towards today's low, which is that month open. I don't know. Uh, but I'll just be waiting for this thing to signal, that it's time. That's the best way to go about it, in my opinion. To have it ready. Obviously, we want to know the levels that we're looking at. Where might we be best served to find support? This is resistance 1084 to 1105. Get a little pause. Maybe your support at this point is going to be more like 110.24, which was the gap, right, that we ended up filling. And we did pull back into this morning, albeit slight, but you can get a really good reward to risk on this too, because say we get up here and pull off and you get back into 120 or 110.24, and at the same time you get one of those alerts that signals, okay, then we'd basically be looking at that point, for upside resumption based on combination of the level and the alert, right? The RSI alert. And if there's people in here that have no idea what the heck I'm talking about, then just go to any swing update, right? Any recent one, and click on the automated alerts webinar, and also has a PDF in there about it. So you can educate yourself there if you're really confused about what I'm saying right here. Okay. Moving on, pound yen is the next one, and certainly big, massive bullish potential here. Okay, we're up very close to the high from, I guess that was August 3rd, yes, and I'm starting to see into the European close. The dollar is starting to get more of a bid. Euro's off pretty good. But this confluence over the next couple of days, I call it 145 to 145.40, right? 145.40 again, or 39, but that was the high from the first day of the year. Again, I'm just kind of going over last night's chart. And this trend line here, right? This is the trend line that was off the October low from 2016. That was a good support line. It starts here. At this point, you trade on it for 1, 2, 3, 4 days. You say this has some, something valid to it. Then you actually trade below it, break it, and then it's actually resistance here. Okay, back on 815 about a month ago. And then you drop below it. So we're back above it. And again, this is log scale. Okay, if you're looking at it on linear scale, it's going to look a little different. Not a lot different, but a little different. Reason we're looking at log scale is because the longer term chart going back years ago is going to come into play here too. All right, so what I'm looking for is maybe we take out the 146.80 August high. And then we get that pullback again. It would make a lot of sense if we did that over the next day, because you got BOE tomorrow. Let's say initial reaction is lower, and let's say it's wrong. Let's say you do get pound dollar back into the 131.50 region, and maybe dollar yen pauses a little bit and pulls back to 110.24. And if that happens, then your confluence for all of this is. Wait a minute here. Did I go back to log? No, I didn't. There you go. Your confluence for all of this is right here, literally. It's all the same area. It's really, really about 145. Okay. So very close to 145, 145.39. Again, first day of the year high, and confluence in all these trend lines, specifically this one, is 145. So that's where you want to see the thing hold if we're going to make a run for it on the upside, towards 151 or so. Which is on this weekly chart, right? So this is why it's in log scale. This is the trend line on log scale, right? So you can see how huge this level is. This was back to 2013. It was a high in February. It was then a low in June and a low back in August of 2013. That same level, right? So those who say technical analysis is only for short-term traders, be damned, because look how huge this is. We've run into this level. We've talked about this level at times throughout the year, but last December it was a top. It was resistance again in May. It was resistance again in July. And what you've done is you've formed this pretty clean triangle. And you have this trend line back, from 2015, August and November, and it's all at the same level, right? So you have this horizontal level, call it 148. You've got the trend line, and it's really a huge energy point, right? Now, typically you want to sell into trend line resistance and horizontal resistance, but this has been tested 1, 2, 3. This is the 4th time, right? And the more times you test it, right, the higher the risk of an eventual break. And in this case, of course, that would be to the upside. With the next level of interest being the low from April of last year, and that's 151.64. Okay. Eventually, of course, the measured target for this is going to be 161.30, which is, pretty close to the Brexit high, actually, up here. I wouldn't worry too much about that at the moment, but did want to point it out. So yeah, heading into tomorrow, the thing to focus on as far as pound yen is concerned, going to be, where are we? Going to be this 145, to 145.40 area. Okay. Take a look at euro here. God, I hope this thing can bounce up to 1940. Really lay it on. Okay, let's go to the commodity currencies. We had this drop here yesterday on Aussie into 79. Well, it wasn't quite into 79.95, 79.98, but the bounce, I was thinking 80.76 for resistance on the median line because it, such a good level for resistance before, and we didn't get it, right? So at this point, if we would have gotten up here and then dropped into 79.45, which is the month open, I'd be more interested in a long, because if you would have done that from that point, you would have had 2 equal legs. Okay. You would have had 2 equal legs. We did, at this point, 2 equal legs is obviously going to be a good deal lower. So 79.20s, and at that point you will have broken the month open. So it might be best to not really try to buy weakness just yet in the Australian dollar. We might be going back for this median line at 78, at the 78.70 region, 78.75, which of course is good support down here too, right? Has been support over the last couple of months, right? July and August. So you can look there. It's also possible that this ends up being a triangle from here, right? A, B, come lower in C, and then you get a D and an E, and then you can go higher. So that's with Australian dollar. Again, no need to to try and pick a low here just yet. Allow it to come in. It might be another 100 pips at least before you get interested in a bounce. As far as resistance is concerned for Aussie, weekly open 80.54. I don't think you're getting back there. As far as resistance is concerned for Aussie, the best I could do is probably say 79.95, which again is just a high volume day from back a couple of weeks ago. I'm not going to spend too much time with Aussie here. Here it is the 9.5 day. So the 9.5 close is a high volume day right here, right? And you're now below it, which typically something I see is a bearish, bearish event, if you will. Kiwi dollar, a little cleaner actually, as far as its wave structure. This is one where, again, even though I'm generally dollar bullish, I think for probably the next few weeks, at least, throughout the month, with Euro 117 and all that stuff, you do have this 5 up. Again, count it based on hourly closes because the overlaps. I know some will say you have overlap, you can't do that, but you got 1, 2, 3, 4, 5, and then this tells me the 3-wave drop here, right? Tells me that this was an A, and this is a 3-wave. This is a 3-wave drop, the A, B, C here, right? And therefore, we're expecting this C wave lower, and we are getting it. So if we're making a low in Aussie at some point here, which goes a counter to the dollar thing, but again, I want to look at each market based on its own deal. 72.08, not far away. It's in 20 pips. Happens to also be the 618. So a lot there. Okay, big level. Trend line 2. So pay attention to that level. I'm not sure, is there a lot of, there is, I think, employment tonight in Australia. Yes, there is. I don't think the calendar for New Zealand's all that much. Nothing actually. Okay. Excuse me, I've got something, a scratch in my throat here. Okay, so that's what we'll look at here, 72.08. Now, being in a general, what I think is more a general, dollar bearish, dollar bullish thing for the next few weeks, am I going to leave an order here? Probably not. It'd probably be something where you'd like to see it get there in reverse, right? Rather than trying to just leave an order, as pretty as it looks, and you want to make it look. At the end of the day, we all have to remember that we can't predict the future. And the proper trading tactics here are key. So, in this case, proper trading tactics would call for watching for a response, like a 4-hour reversal or something, right? When it comes to Euro, at this point, I am going to leave an order for a short, because if we do have a spike up into resistance, I want to take advantage of it. I might not be around to do it because I might be sleeping, or we're eating lunch or something. I don't know. So we'll leave that order at 1940, 1945 or so to short Euro, because again, I don't want to miss that, and my general theme is higher in dollar, lower in Euro, especially Euro, right? I say lower or higher in dollar, but it's really, I think, more Euro based. And we'll look at that with Euro pound here in a sec, but let's take a look now. We'll go to the dollar CAD cross, and after that we will take crosses and any questions on maybe any other markets that you might want to look at. So okay, so looking at dollar CAD, trend line here. This did get a low. Still looks like to me that you can make the case for one more low actually in dollar CAD, based simply on 1, 2, 3, right? And this is a momentum extreme. So the idea that that's a third wave is certainly supported with that. Now you've got 22.29 here, which is that's the Bank of Canada. That's the BOC high volume level, right? So that's the surprise, rate hike. And I say surprise because the market was obviously surprised. You don't get a 300 pip drop in 1 minute, really on the tick, and say that it wasn't a surprise. So it's a surprise to the market. It might not have been a surprise to some of you, I don't know, but it was certainly a surprise to the market. So a couple levels to watch. This one, which we're 15 pips below, the channel line or proposed Elliott line, right? This is Elliott channeling. You take a line off 1 and 3, extend it off the high at 2, and it's supposed to estimate basically your high for wave 4. And that would be up around 122, 122.50 or so, which obviously is in the vicinity of the 22.29 level. So that's my working assumption, that you're going to get 1, 2, 3. You're going to get, this is going to be, this rally is going to end up being a 4th, and you actually are going to get one more low. Maybe that happens later in the week or something with some CAD data. CAD, you've had a tendency of the market to the Canadian dollar to rally on any CAD data. CAD existing home sales is 8 o'clock. I don't know. You got more dollar data later in the week, so no big CAD data it seems on Friday this week, as there has been. Yeah, so if there was a place to, actually maybe go counter to your or my thought that the dollar is higher for a while, but again, that's more euro, then it would probably be CAD and Kiwi. So, well, I guess in pounds. So why don't we look at, it would make sense then, CAD, Kiwi, pound. If those are the three that look okay, especially pound, then you'd want to match it up, right? Against, say, euro, pound, right? Kiwi, euro, Kiwi, and euro, CAD. So why don't we do that? Hold on real quick here. See where this comes in. See here. Not as clean. Could be something like this though. I would actually, I'd pay most attention. I said this level here, but look, if you go through it, I'm not going to say that the dollar CAD is, done, right? 4th wave, this is not necessarily an exact science. This is resistance, but so too is this red line at 23.13, okay? Remember that this is based on, and that's what I give more weight to in these things, is that's the trend line from 2016 down. 2016, 2017, right? January 2016, and then May of this year. What I'm looking at are parallel. I want to trade on parallels to that line because that's when we've seen the biggest moves. Right? Remember, what did we do? We got resistance up here a while ago. It's because of this. Touch here, touch here, touch here. It's like, it's beautiful, right? Now we end up getting out of that trade way too damn early, but you get the idea. Trading on these parallels, I think, is probably going to be the way to go for the foreseeable future. So let's call it 22.50 up to 23.15, okay? Because that is where this parallel comes in. And again, it's the same parallel here, right? Just extended and plotted over this low, which again was support before the rate hike. And of course, the underside of the line from all the way back in 2012 is up there too. So, keep an open mind as to these resistance levels. Let's go to some of the crosses. So, said we look at, say, Euro CAD, Euro Pound, Euro Kiwi. So let's do that. Euro Kiwi. So it's trading in this fork, which I have labeled here. Some would be tempted to maybe change it to draw it over this spike low, but it's just at a spike low, so I don't want to do that. And you have turned down within this, obviously still within a super strong uptrend, right? But if we zoom in to this chart, if you start to see maybe some behavior changes on the slopes, then it would be an interesting proposition for a short, right? I'd rather trade euro dollar and Kiwi dollar separately, but pointing this out for you. So 65.50 could be a resistance area, and you can see why. It's based on this. You've seen some stuff happen there before. That would be around 65.50. And for some reason, this Euro Kiwi chart is not loading, but that's all right. Let's see. I hope that my station doesn't freeze. Sometimes that happens. Let's go to different. We'll go here and look at it. Okay, watch the dollar up here. Actually, folks, you're getting close to 11,890, which is the median line where you could get your first pause on the move higher here. Okay. Still not up and running. All right, we're going to go to euro pound. But anyway, so 65.50 area that you want to look at, in my opinion, I think, for euro Kiwi. Okay, euro pound. Okay, so this one, this is a weekly chart going way back. I thought we were going to try to top up here. It, blew through it and has rolled over, but quite the double top potential, right? I mean, look at that. So what I would, with zoom in here on this chart, because remember, we have more or less, or I have a kind of a bearish view on euro and a bullish view on cable, albeit on a drop into 31.50. But if we head back into the short-term chart here, okay, so it's really quite similar. So this is a 240-minute chart. It's going to be quite similar to pound dollar. What I would do here, let's draw a channel. Okay, so there's your channel. Underside of this, I would expect to actually see a little bit more of an advance. Mahai, absolutely, my friend. We will look at the S&P. We will look at the DAX. Let's start. You're going to kind of see this is how I, would go about if I'm looking at a chart and about to just, try to figure out what the hell's going on. So if we look at it from this standpoint, is this one the one to watch? I can't say that. I mean, it's not really all that precise. That was Brexit, by the way. So let's change it up. Let's see if this does better. Where's the low back here? What is that? Okay, we'll go from that one. All right, so we're going to draw here. Okay, so this actually looks pretty good, right? You can see that you hit here, trend line here. So to me, it does give some validity to this this slope. A target on a short, on a euro pound short, would just be down here. Not also understanding the potential for this bigger double top. And why did I draw it over here, you ask? Because again, huge spike up here, right? That's October 7th last year. I don't like to necessarily draw off of the big obvious spikes, right? That was the pound flash crash, which was just tested. So that might be the place to go. So British pound, right? You see the touches on this trend line here, 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 actually support on the way up. That line tomorrow is going to put you about 91.10. If you get again that initial reaction, if it's lower in cable, that's certainly not a impossibility. And that would be how I'd go about looking at euro pound, is 91.10 and then down towards 87.50 or so, which is the trend line. All right. Now we can obviously go shorter term, although I've come to realize that a lot of times it's simply the longer term charts that matter the most. That channels, okay, that's nice. I wouldn't really look at that too much. So yeah, but those are the levels that I'll offer for euro pound, if that's your thing. Okay, 91.10 and then 87.50. What about euro CAD? So euro CAD is one that we've obviously, oh, here we go, we got it back. Okay, so we said 65.50, right? That works out well. 65.50, 65.40 is actually the week open. So in euro Kiwi, I'd say euro pound is probably a better bet. Pound Kiwi itself actually looks quite constructive. But let's go to euro CAD. This is one that we had orders in, last week and early this week. It just never got triggered, but I still like this one. So if you do get a bounce back up to 147, might be asking a lot, but it's still the area to look at, right? And it's just simply this trend line channel in the center line, which is very clean, right? Lots of touches on this. And if you were to get a move up into it, it'd actually be closer to 46.90 now. This low down here is 46.81. So it's a good spot. I don't know if you're going to get a move up into that region, but if we did get, the euro to bounce up into 1940 and dollar CAD, get up into the parallel above, near 123.20 up here, right? If you get through 22.30 and you get 23.20, then yeah, it might be the place to look. So euro CAD, still the same idea, right? Still want to trade at that level, in my opinion, up here. Okay, we'll look at the S&P and the DAX. Obviously, guys, we look at a lot of charts here, and I know sometimes it's probably, maybe not conducive to the best outcomes, because a lot of times you want to have a focus, right? You want to have a focus. Well, we can look at charts, but then our trading focus can be on going into tomorrow, say on pound, right? Whether it's pound dollar, euro pound, right? Pound yen. The levels are there and they're awfully clean. So it's still okay to look at other charts. All right, S&P. Let's look at the S&P 500. S&P 500 here. Got to say, it's been this is a 4-hour chart. 1, 2, 3. Is this the diagonal? I'm not so sure about that anymore. And here's the reason why. Reason being is that a lot of times if you get a diagonal, it's a quick pop and then a reversal. And also, the currency markets are not saying really that there's this big scary risk aversion thing going on. I mean, dollar yen, we're seeing the yen crosses, and dollar yen is turned up and gapped up and gone on its normal FOMO thing on the upside. But it's not like dollar yen's coming into this big top after a sustained rally. It's actually coming off of a big low, right? So to me, doing intermarket stuff, there's a lot of confusion there. Just not comfortable, I guess, with the U.S. indices. They kind of do nothing but grind higher. Anyway, I continue to follow this slope, I would say. So let's go here. No, we got to bring it down. Okay. So this parallel, this is back to 2016, okay? The February low. Median line. It's in blue. All the lows since we started this year, except for recent ones, which is why things got so nerve-wracking, because we were below it. And I thought if we found resistance on it that we'd go absolutely berserk on the downside, which we did find a resistance on it back on 822, and then the market rolled over and then it screamed higher. So, all the lows forming on this, and now we're back above it. So I'd watch that line again. I mean, without trying to be, too flippant about it, but you do want to keep it simple, right? I would look for support on that line again. I mean, it'd be 24.75. If you get a drop of that magnitude, 20 handles, then I'm sure that the bears are coming back out of the woodwork as they do on every dip. But that's where I'd be looking. So my comfort in calling this an ending diagonal is not all that high. In fact, it could just be extending higher because the momentum on this is not consistent with an ending diagonal. Ending diagonals, you want to see pretty strong divergence, right? Like a really petered out, RSI. So like something like over here, right, where RSI is down near 60. Okay, we don't have that. So that tells me that any dip here is still okay to look at this point. So look at the 24.75 area again. It's the median line. It's been influential all year. And then as far as resistance is concerned, calling resistance obviously at all-time highs is never an easy thing to do, but with slope analysis we can try. And these parallels up here, especially the one that I'll put up in magenta. Okay, you can see all the touches there. This is back in December 13th. Support back here in March, resistance really ever since then, right? Ever since that point, it was resistance. So I would be looking at that as your resistance point. Kelly, thank you very much. Thank you very much. That's really nice of you to say, Kelly. Yeah, so here is the levels that I'm looking at, right? So yeah, 2473, and then eventually these parallels up here, which, you know, that could be up in the 2530s. I'm wondering if we have any levels here to look at. And then I'm gonna go back and comment on Kelly's tweet, which was really really nice. So yeah, Kelly, the thing is too, you know, that's why I have the Twitter thing. So it's like, you know, markets, the 24-hour market, it's, yes, there's news events that come out, but there are things that happen on the market's own time. So like when the market gets to a level, I want to let you guys know about it. So like last Thursday night, for example, that's why I was tweeting out, you know, stuff about euro, saying like, I haven't felt this way about an extreme move since December, right? Ended up, that was the day of the top in the euro, right? Now, is that a trade? No, it's an opinion, right? A trade's a different thing. You're risking your own capital. That's a different deal. But yeah, you know, everyone's going to make decisions too based on their own thing, you know, in their own mind. And you know, all I can do is try to give you, I guess, you know, what I'm seeing, I get, you know. And that's the idea of the Twitter thing, right? Some people don't like that, but you obviously do, and congratulations, it's working out for you. I'm very happy for you. All right, so those are the levels, Mahai, and you know, I want you to, you know, maybe look at those levels for the S&P moving forward. I know that I will, and let's look. I want to see if there's anything's up here that would be for the S&P, if we got any good square root stuff going on. Okay, actually we do. So remember the last high was at this square root level, 24.89. Well, the next one is actually 25.36. And lo and behold, that I think is probably about where this comes in, right? Yes, it does. So 25.36, it would be my best guesstimate estimate, and the month opens 24.74, which is where we said we'd be thinking about with the median line anyway. So yeah, those are the levels. All right, let's look at the DAX, and then I got to run. Here also a really long-term chart in the S&P. Okay. S&P 500. Now let's look at the DAX. All right, so German 30 is the DAX. CFD. So we are getting that relationship back with strengthening euro, right? It was a couple days away. There was quite the divergence there, right? The euro continued to go stop people out, including me, until I try to get back in. But yeah, the DAX here turned back up. I'd be looking at this is a horizontal level here for support. 12.310. 12.310 on the DAX is where I'd look for some support. Your resistance is going to be right up here. Okay. Just follow the parallels. Okay. Follow the parallels, and eventually 1, 2, 1, 2, 3, 4, 5, right? So I think that your trading bias here should be for 1, 2, 1, 2, 3, 4, 5. We're going higher in a fifth wave, right? 5 of 3, and then another fourth and a fifth. Don't think about all that crap. Just think about the fact that support is the trend's up and support's 12, 3, 10. Okay, that's what I suggest doing with the DAX. Might be something like that, but I wouldn't go there. I would look at this as the bigger area for targets and stuff. Okay, if you squeak out to a new high, it might be on this parallel. All right. Okay, got to run. I'm going to get this up in archive for everybody. Again, thank you all so much for your time. Seeing a turn here in the dollar, but pound dollar still has there's a setup on the long side for cable. So don't get married to the idea that the dollar is just up across the board against everything, right? It's more a euro thing, in my opinion. That's why we looked at the euro pound chart. All right, take care. Have a great rest of your week. Talk to you guys later.